All right, my friends, I'm going to start a series on a financial planning scenario with Bob and Jane YouTube. All right, so we're going to use Bob and Jane, and I'm going to break this up into a bunch of different series because I'm not exactly sure how it's going to go, but it'll be interesting. So, what I'm going to do to start with is we're going to take Bob, who is 65, and Jane, who is 62, and we're going to have them retire next year. They both have $250,000 in their 401k, and they're going to get Social Security, which I'll dive into all that, and they have a house that's paid off. All right, so basically, it's going to be as simple as can be: $500,000 in the 401k, $250,000 each, a $400,000 home that's paid off, and that's it. All right, and then they need $5,000 a month in income. That's it. We're not talking anything else. We're just going to start with there. Now we can dive into deeper as we go, add different variances. But I wanted to start simple to show you how this can work. I have no clue what the number is going to look like right now. I've none, but it will be interesting to start this. So hang in there with me while we do this, because I think this will be interesting. And what we're going to do is show you what it looks like from Social Security, show you what it looks like from the retirement and cash flow, taxes. We're going to show you everything. And this could be a lot of fun. No clue how many videos this will be in the series, but it'll be interesting to find out. So stick with me and definitely subscribe so you can get updated when we do this. I'm gonna try to do this every day actually, because I've been wanting to do this for a while. What happens is I put the cart before the horse, and I'm like, now we go back. So I'm just gonna start simple right now, and I think you'll appreciate that. So don't forget to subscribe. All right, looks like my thing's messed up there. Okay, good. So let me go down here. This is the Right Capital software that I use, and there's my little logo, Heritage Wealth Planning. And this is good. I'm a big fan of the Right Capital. There's two major three, Navaplan. No, not Navaplan anymore. Money Guide Pro, which I've used, that was okay. Right Capital, which is what I do use, and then eMoney. eMoney is a little bit better than Right Capital for planning. But Right Capital, when it comes to tax stuff, just blows eMoney out of the water. No other way around it. And given that I like taxes because of cash flow, I had to use Right Capital. For me, it's a second benefit too, is that it's a heck of a lot cheaper. eMoney is 10 times more expensive than Right Capital. So you might sacrifice a little bit on cash flow with Right Capital versus eMoney. But you get that in abundance when it comes to taxes. So I use Right Capital, and at rightcapital.com you can see, and they give us a little logo that you can use there. So let's dive into this, because I do think it's going to be interesting. So the first thing we do is we go to the dashboard, and I'm going to show you. We got Bob and Jane YouTube, okay? And so we show the Right Capital stuff will show us our assets, show us liabilities, and show us net worth. We don't have any liabilities. We just have a net worth of $902,000. That net worth consists of each Bob and Jane have $250,000 in their 401ks. And the real estate assets are $400,000. Again, as simple as can be. That's it. Nothing else. If I click on that, nothing else there. So now we're going to go to details, and it'll show us just a balance sheet. Again, their invested assets, 251, and I'll get to that a little bit here in a second. Primary home is jointly, so they joint tenants with rights of survivorship. Primary home. So we just take their assets, add them up, and subtract the liabilities, and there isn't any. Nice thing about Right Capital, give you a historical. I just actually created this. I just literally did. But if you have this in Right Capital for years on years, it'll show you historical net worth, which is actually pretty cool. It'll also show you your assets right here. Now, obviously, that's your net worth. In this case, is your assets, because there's no liabilities. Remember, net worth is your assets minus your liabilities. So if you have no liabilities, your net worth will be your assets. All right, historical liabilities, there is none. What I like about this is one of my major claims to fame is we really want to get your liabilities down. Having zero or minimal liabilities is the number one step in retirement planning, bar none. I'm just using these guys for the time being. And then I'll show you your investments, and this will be their entirety of their 401ks. All right, so that's the balance sheet. Liquidity is kind of nice. Now here they're just saying how much cash you have on the side, how much should you have. I don't really pay much mind to that, because this is just a computer model. It doesn't do a whole lot for me. And then we don't have student loans. We don't have any debt. And the budget, I'm not going to link up anything. Budget tool is only available if you link an invest or your bank account. And I'm not doing that. All right. So that's the balance. The only thing I'm really concerned about in the dashboard is the balance sheet. But I do want to go to the profile. This will show us who these people are. And what we want to do is we want to go to family. All right, so we click on family, and we have Bob, age 65, and we have Jane, age 62. We got their 2 kids, and frankly, Joey and Julie don't care because they're not going to be part of this analysis. I just threw them in there for the heck of it. We already showed you net worth. All right, so the net worth, we come back here, and this will break it down to net worth. So we're going to show you their investments. All right, so their investments in this case is Bob's 401k. I just have them all invested in the Vanguard total stock market in 3,450 shares, and right now it's trading at roughly $73 a pop. So that's 250. That's Bob's 401k. And then I have Jane's 401k, the exact same thing. See, Jane 401k is an account type 401k. She doesn't have any cash in it. She owns it. And you see VTSMX is a ticker, and that's it. So literally that's it for investments. Is their 2 401ks. Property, I'm going to use their home at $400,000. Now, what does happen here is which I like. I have appreciation of 3% a year, whatever. I'm going to have a property tax of $5,000 a year, maybe more or lower depending on where you live. If you live in New Jersey, it's probably 3 times that. If you live in Cherokee County, 3 miles away from me, it's about half that. This is about my property tax. Annual insurance, I'm just putting on homeowners insurance. All right, so pretty good. And owner, we want to make that joint, actually. All right, I just noticed that, and click. All right, you just anytime you're doing financial planning software, you make sure you have your owners allocated. And I talk about equalization of estates quite a bit. You want to make sure your estates have the proper accounting, who owns what for sure. Okay. All right. So now that's it. And now goals is what the interesting thing is, retiring. So they're going to retire next year. Bob's going to retire at 66. Jane will be 63. They're going to have monthly expenses of $5,000 a month. Again, folks, this is just the broad base there. We're going to go into this in deeper, but I just want to plant the seed in your head that says, okay, 1 year from retirement, and they need $5,000 a year in income. All right, that's what we're trying to plant here. I think we do. Let's see here. Do we have income? And I don't. Yeah. Okay. So right now, the only income they're receiving is Social Security. Actually, I want to take that off. Let's take that off. And we're going to save this for a sample start age. We're going to start age at 66. Bear with me just 1 second. And we're going to use based on full retirement benefit of $2,600. There we go. Good. All right. We're going to say Jane is, we're going to take already receiving. We're going to say use start age at 65 based on her full retirement benefit of, let's see, we'll say 1,800. Okay, so basically we have Bob at full retirement age at a full retirement benefit of 2,600. That might be a little bit more than I want to use. Let's do Bob full retirement benefit 2,200. Okay. In fact, what we want to do then is 2,200. That would be an AIME. And that means he's probably making about $70,000 a year off the top of my head. So let me pause this for a second. I want to get in my head what that would be in terms of his income. And that's gonna be too much. So I don't want $70,000. I want to say his income 2,200. So 70,000. If you average 70,000, your average index monthly earnings would be 5,833, which means your benefit would be about $2,400. I want to say that's a little bit too high. So we're going to say, yeah, so that's about right. 2,200, about 60,000 or so. So what you do is you take 60,000, divide that by 12. That gives you 5,000 a month. All right. So you take 5,000, subtract 895, because remember the first bend is $895. So what happens to Social Security? They take your AIME, in this case, your AIME, your average index monthly earnings. And again, we're just throwing this out there, but it's not too, I mean, it should be fairly feasible to accomplish this, is $5,000 a month. We subtract $895 from $5,000 a month, and we get 4,105. So now we have 2 things going on. The first bend is $895. And if you do any Social Security, you know what that equals. That equals $805.50. So for every $895 of your average index monthly earnings, you're going to pocket 90% of that. You're going to pocket $805.50. Now we take the next band, I guess, is 4,105, because 5,000 minus 895 is $4,105. And we times that by 0.32, because the next Social Security band amount is 32% of the amount between 895 and 5,397. All right. So now we take 4,105 times by 0.32. That gives us 13 13,805. That's, man, it's almost spot on. Plus 805. Yeah. All right. Good. So between 60, probably 65,000 a year is what Bob's making. So I'm pretty comfortable with that 2,200 number there. That's good. Which means Jane's 18. Yeah. All right. Good. That's fantastic. Between them, they're making roughly $100,000 a year of income. All right. That's before taxes, before 401k contributions, before FICA, the whole thing. So I'm pretty comfortable with that. Let's just keep going through this. Savings, they don't have any. All right. We've already talked about their 401k. That's all they have. So you see, I need to add savings, but I'm not gonna, because we already have the 2 401ks. That's it. Expenses is a big one. I'm saying $5,000 a month in monthly pre-retirement living expenses. I'm not adding any tax expenses here because that's just local tax, and I'm saying their tax status is married filing jointly. So we can change this to anything we want. I'm just saying 60,000 a year, 5,000 a month is a pretty good number there to start with, and then we go back to family. We already talked about this. All right, so that's how we're setting this up so far. We got Bob and Jane. Bob's 65 years old. Jane is 62. Now we got to do income, because we do want to say that they're going to have a salary. Bob's salary, we're going to say 60,000 a year. We're going to say 65,000 a year, and we are going to stop that next year. All right, so when Bob turns, income ends. Oops, going the wrong way. 2019. So he'll work for 65,000 until the end of next year when he retires. We're also going to add an income for Jane, and we're going to say she will work until next year as well. And we'll just say she's making 45,000. I guess with 30, we'll say 40,000 a year for simplicity. Owner is Jane, and she's going to work until next year, and then she will retire. All right, so you guys with me so far? So we got Bob and Jane. Between them, they're making $105,000. Now, just going back to my family, my wife hasn't worked for a number of years now. So when she gets into the workplace, when the oldest is out of school, she might only have 10 or 12 years of actual working full time from when the oldest is out of school until she retires. But she does have a few years behind her. So even though you're only making $40,000 a year, what we know about that is we take $40,000 to get your adjusted income, adjusted index monthly earnings. You take 40,000, divide that by 12. All right. So now we have 3,333 is Jane's average index monthly earnings. If 40,000 is your average index, average yearly monthly, average index yearly earnings, and 40,000 is not, that's not a huge amount of money by any stretch of the imagination. I mean, think about it, making $10 an hour, you're averaging, that's $10 an hour would give about 24,000 as an income. I guess it'd be about 21,000, because the average a 40-hour work week is 2,080 hours. So basically $40,000, roughly $18 an hour. We'll just use that for the time being. So that's 3,333 would be her average index monthly earnings. We subtract by 895. That leaves us a 2,438 times that by 0.32. That's $780 plus the 805. That gives us 780 plus 805. That gives us $1,600. So we want to take her social. We want to drop this down a little bit for her Social Security. Excuse me. We want to go back to income. So let's go here. We're going to save that. And we want Social Security to be based on 15. We're going to say 1,500. All right, good. I just kind of did that on the fly. If you didn't follow, that's no big. I just want to make sure the Social Security is somewhat right. Bob's is 2,200 and Jane's is 50. No, see, I didn't save it. You got to make sure you hit the save button. Apparently, I did not. Okay, good. All right, so let's save that there. All right, and now, all right, so far, so good. We already did all this now. We got net worth, goals, income, family, dashboard. We talked